Many investors love Realty Income for its monthly dividend, and as its share price has been heading south, touching recent lows of about $46 per share, it's not been much of a surprise to see the monthly dividend company getting so much lip service. It's also not surprising to see so many investors, myself included, putting their money where their mouth is with this one. Over these last couple of months, I've added quite a bit more shares of this company, and I know a lot of you have out there as well. So in this video, I thought we'd take a look at Realty Income and revisit some of where this company has been, and also talk about what the company might do from here. And with that said, obviously, nobody can actually predict the future. We don't know what's going to happen a year from now, 5 years from now with these companies. We don't even know what tomorrow's going to bring. There's a lot about investing that's unknown to us and that's outside of our control. And although a company's past performance might not necessarily be how it trends into the future, it's still something we can look at. And I think that's the best place to start. Now, as far as its performance, historically, Realty Income's actually gone above and beyond. What we're looking at here is the company's total return since first being introduced to the market back in 1994. And since then, it's absolutely slaughtered the S&P 500 with over 4 times the returns. If you run a backtest comparing these two and would have invested $1,000 into both of them at the start of 1995, you would have scored twice the amount of money investing only in Realty Income compared to the S&P. Not bad. Having said that, if we zoom into a more recent time period and look at the returns just over the last 5 years, it tells a much different story, and here Realty Income dramatically underperforms, with 2023 and more specifically these last few months being a big driver of this underperformance. For some investors, this probably doesn't feel great, especially if you're someone who's been holding Realty Income for a number of years. On the other hand, given the current state of the company's share price right now may also be a pretty good time to buy, because it's 20% cheaper than it was at the start of the year, and the opportunities to buy Realty Income at this deep of a discount are pretty few and far between. Morningstar gives the company a fair value of $76 per share, and this is the farthest it's been below that fair value since as far back as Morningstar will show us. Looking at the forward price to funds from operations, which is kind of like the real estate investment trust version of the PE ratio, Realty Income's is sitting at about 12.4, and about 9 months ago, I made a video on this company where it was much higher at about 16.5, so it's come down quite a bit. Realty Income typically commands a more premium price tag because it is such a popular real estate investment trust, which explains why right now could be such a good buying opportunity. But it also begs the question, what is it about this company that makes it so popular in the first place? Well, for starters, we mentioned earlier that many investors love Realty Income for its monthly dividend, which certainly contributes to the company's popularity, and they've leaned into this so hard that they actually trademarked the name The Monthly Dividend Company, which, as I'm sure you can imagine, has certainly resonated with a lot of cash flow seeking investors. Now, while you most definitely shouldn't buy a stock just because of its dividend, I will say, to be fair, Realty Income does not at all underdeliver in the dividend department. Not only is the company's forward yield sitting nice and high, right above 6%, which is about 1.5% above the company's 4-year average, but more importantly, Realty Income's dividend has been incredibly consistent and dependable over the years, with quarterly raises granted without pause for nearly 30 years at an average 4.4% compound annual growth rate. Having said that, it's no surprise why so many investors are attracted to this company, because due to the nature of this investment strategy, consistency and dependability are two highly coveted qualities that you'd want to look for in an investment. And Realty Income's got that going on. Many of their tenants are non-cyclical businesses like grocery stores, convenience stores, dollar stores, and drugstores, with some of their top tenants being Dollar General, Walgreens, 7-Eleven, Dollar Tree, FedEx, Walmart, Home Depot, and Kroger, just to name a small handful. Furthermore, the defensive makeup of this company's portfolio was recently bolstered even more after they acquired Spirit Realty Capital, ticker symbol SRC, for a whopping $9.3 billion, and SRC's portfolio mirrored Realty Income's in a lot of ways. These two companies shared many of the same tenants. In fact, 14 out of Realty Income's top 20 tenants were also leasing properties from SRC, so it was a highly complementary addition to Realty Income's already portly portfolio, and actually, this acquisition will make Realty Income the 4th largest real estate investment trust in the S&P and the 150th largest company in the index. Now, while being one of the bigger, more diversified fish does have its advantages, namely greater resilience, access to more capital, and potentially larger deals, it does have its downsides as well. There's something known as the law of large numbers, which states that as a company grows, it becomes more difficult to sustain its previous growth rates, and because of this, an investor should expect their returns on that company not to be as large as they might have been in previous years when the company was smaller. Warren Buffett's talked a lot about this over the years at various Berkshire Hathaway meetings, and there's a clip from about 20 years ago where he sums up the law of large numbers pretty well. Let's take a listen.
I think if you're working with a small amount of money, with exactly the same background that Charlie and I have, and same ideas, same whatever ability we have, I think you can make very significant sums. But as soon as you start getting the money up into the millions, many millions, the curve on expectable results falls off just dramatically. But that's the nature of it. You've got to, when you get up to things you can put millions of dollars into, you've got a lot of competition looking at that, and they're not looking as I did when I started. When I started, I went through the pages of the manuals page by page. I mean, I probably went through 20,000 pages in the Moody's Industrial, Transportation, Banks, and Finance manuals. And I did it twice. And I actually, looked at every business. I didn't look very hard at some. Well, that's not a practical way to invest tens or hundreds of millions of dollars. So I would say if you're working with a small sum of money and you're really interested in the business and willing to do the work, you will find something. If you were, there's no question about it in my mind. You will find some things that promise very large returns compared to what we will be able to deliver with large sums of money.
So anyway, as this applies to Realty Income, what's worked in the past may not move the needle as much for the company moving forward. Out of necessity, their game plan from here on out may be more aggressive acquisitions like what we saw with the Spirit Realty purchase, or even prior to this, their recent investment into the Bellagio Hotel here in Las Vegas. With that said, bigger and more aggressive investments could potentially come with more risk, and we'll just have to see how Realty Income maneuvers from here. But as of their most recent earnings report, which came out a couple days ago, they've been hitting those investments hard, and just in the last quarter invested a large sum of $2 billion. And their earnings overall looked pretty good, by the way. They beat on both the top and bottom line for the quarter and saw a huge year-over-year jump in revenue by over 24%. Anyway, switching gears and revisiting the company's dividend stats, the 5-year dividend growth rate isn't even 4%, which is where we might lose some investors. So if you're looking for more rapid growth, especially in the dividend department, other real estate investment trusts like Vici Properties or American Tower Corporation, which have double-digit growth rates, might be more up your alley. Speaking personally, in my portfolio, I've always thought of Realty Income as a more defensive, slow and steady position, and I think it's done a really great job of paying a dependable stream of income over the years that has grown, albeit slowly but surely. And having said that, I feel totally fine having this as one of the larger positions in my portfolio. In fact, it's one of my top 5 largest. And if we take a look at my position over here on my dividend portfolio tracking spreadsheet, which you can start using for free, there is a link to download this in the description of the video. But here we can see I have just over 66 shares of Realty Income at an average cost of $55.47, which until recently actually would not have been considered a bad average cost per share. And I'm still pretty happy with this, even though the current share price is quite a bit below that, $50.68, which looking at my share price return means that I'm down 8.64% with Realty Income. But if we include dividends in the calculation, I'm pretty close to breaking even. I'm down less than 0.5%. Now, like I said a moment ago, this is one of the bigger positions in my portfolio. And looking at how my portfolio is diversified, Realty Income here makes up 6.9% of my total weighting. If we scroll down, seeing how my portfolio is diversified by income, it looks a little bit different, and Realty Income is actually my highest income generator, making up 8.77% of my portfolio's total income. Having said that, I understand that a company like Realty Income isn't for everybody, but I will say it is one of the 10 stocks that I would include in my perfect 10 stock portfolio, which I'm telling you about in this next video right over here. I ended up creating what I call my perfect portfolio, and it actually completely dominated the S&P 500 over these last 10 years on a back test. Kind of fun to see, but anyway, click right over here to check that out, and I'll see you in the next one.